Good morning. It is May 18th, and unfortunately, Friday afternoon and really all day for mortgage rates was an absolute bloodbath, and we are staring down higher rates than we have in a little while. Officially, conventional average is over 6.5 at this point, and headed in the wrong direction. FHA, VA climbing up over 6% again. Started off a little bit better today, but you just never know. Anything can turn in the markets right now with any kind of information at all. And so I want to make a couple things clear. Inflation, gas concerns, gas prices concerns, everything stemming from the situation in the Middle East. That is what's driving this whole thing right now. The markets are rising. Inflation's a concern. Everybody that works in the Fed and around rates that has any kind of influence at all loves to predict. And right now they're not seeing what they want to see. And so the other thing I keep hearing, I really want to address is, well, Powell's going to be out. We're going to have a new Fed chair. Rates are coming down. That is not what's happening right now. The Fed chair was announced just before markets went crazy in the wrong direction last week. So the markets look at things and then predict forward. They don't react. They're always ahead of it. And so they already know that the Fed is going to change, and the rates still went up. So if you've been saying that for a while, what do you have to say about that now? Unfortunately, the data is the data. So don't fall for sales or marketing gimmicks or traps of just listening to what you want to hear. If you look at the data, it's showing you that inflation is sticky. The market is nervous about that inflation, and because of that, higher for longer is unfortunately back into play. Oil prices have everything to do with it. Obviously, we're seeing that up in the gas stations around us as well. But just changing the Fed chair does not magically erase inflation. So rates are not going to be forced to come down any lower anytime soon until we start seeing things change. It's all about the war right now. If we can get some news, ceasefire, the Strait of Hormuz opening, no more trouble, good negotiations, something like that is what's going to change the rates to come back down sooner than anything else. Because remember, before this all started, we saw 5.99. So if you look at this is January 2025 to about a year and a half's worth of data here. We are still trending downward. But then this little blip right here, some of the Iran situation, right? If you look at just 2026, we are trending higher, right? That's all because of gas and inflation concerns. So just keep in mind, it can come down quickly, but you've got to be ready. And so overall, there's still buyers out there winning in the market, because the biggest thing that you can't change, you can always refinance, you can reshop insurance, you can protest your property taxes here in Texas, but you can't change your purchase price. We are still in a bit of a dip right now that you can buy in our local real estate market. And so if you stay focused and understand that this is a long-term game, real estate investing, whether it's your home or investment property for rentals, hang in there, because the purchase prices are still good. You can still get seller concessions. And if you're not ready just yet, start preparing, get ready, start looking at improving your credit scores, something else on the application that you know you could work on. If you get on it now, you will be ready to lock when it's time, because it'll come back. It'll come back fairly soon, but then it'll go up and down. Look at these bounces. So if you take advantage of these and the combination of those sales prices, you're going to be in good shape. So keep in mind, it's a long-term game. Let us know if we can help you. We're all holding on to our seats very tightly here, but I think we're going to have some good times ahead. Have a good one.